Thank you all very much for joining us today. My name is Bill Hufnell, and I am one of the founders and owners of BayPoint Wealth Management. We're a fee-only financial planning firm located actually in several cities. Primarily, our headquarters is in Annapolis, Maryland, but we have an office down in Sarasota, one in Asheville, North Carolina, and we just added a new partner, Lynn Dipple. And along with Lynn, we added space up in Columbia, Maryland, right by the mall in Columbia. So we have an office now in Howard County. As you know, today we're going to go over commercial real estate. The primary objective is to just give you an overall review of the market, and then specifically maybe from a user's perspective, from a business owner's perspective, some of the things you should consider if you're looking for office space, from either a lease or from a sale perspective. So we're not going to go too much into commercial real estate as an investment, although we'll cover a few matters relative to that. It's mostly going to be for somebody looking to acquire or sell commercial real estate. John Rosso is, well, he's to my left here. I don't know if he is to your left or right, but John's going to be our panelist today. We're quite fortunate to have John. I'm going to introduce John in 1 second. I just want to do a few housekeeping matters first. One is we'll probably go about an hour. Maybe the first 45 minutes we'll fill with content. Everybody is muted. We are recording the session, so we'll have it available later. If you have a question, down at the bottom of your screen, there's an area where you can submit questions, and I will monitor that during the presentation. And at the end, we'll have a Q&A session, maybe for 10 minutes or so. If we do run late for some reason, if you post a question and we don't get to it, then either John or myself will follow up after the presentation and answer your question. We're also going to send out after the presentation to all attendees a recording of the session, as well as some other information, including John's contact information. So on with the presentation. So John, good morning. Thank you very much for joining us this morning.
Thank you. Appreciate it.
Yep. Yeah, and I just wanted to, maybe before we start getting into the detail, John, if you could tell us a little bit about yourself. How did you get involved with commercial real estate? What do you like about commercial real estate? And maybe from your business perspective, any geographic territories that you typically work in, or any specific products that you typically work in?
Sure. Yeah. So thank you, Bill. Appreciate it. And thanks for inviting me to do this. It's always fun to do something a little bit different in the day-to-day minutia that we get into. But yeah, so a little bit about me. I got into commercial real estate approximately 15 years ago. I guess my story is I went to Severna Park High School. I grew up in the Severna Park, Millersville area. I gained an interest in real estate for whatever reasons growing up. I didn't come from a real estate family. My mother's a school teacher, 44 years at Glen Burnie High School. She just retired. God bless her. And my father was in human resources, just kind of in the corporate field. So I think growing up, I always found an interest in real estate. Some friends' parents were in commercial real estate. They seemed to own properties, and it was always just kind of something that interested me. So I knew I wanted to do something in that field. I just ended up taking real estate classes at a local Prudential Carruthers office. At the time, it was on Benfield Road, and I was a senior in high school. And I got my real estate license a year out of high school. I went to Anne Arundel Community College. And while I was at the college, I met a gentleman I was on an entrepreneurs club board, if you will. And he, at the time, was the president of the Student Association. And he said, you know what, John, you should meet this guy, or a couple guys that I work with. At the time, it was the Hogan companies. And so I got involved with an internship. The Hogan companies, there was a subsidiary, Murphy Hogan, which was a commercial real estate arm. I was doing land brokerage and some learning about commercial real estate. So that internship led me, once I went to University of Maryland, the business school at the University of Maryland. I set my schedule up so I could commute back and forth and just get involved into real estate full-time as much as I could while in school. For about 10 years after graduation, I was with the firm Murphy Commercial here locally. And after that 10-year period of time, I decided with my wife, with her support. She was 8 months pregnant at the time. So she said, you know what, my decision was to hang my own shingle, multiple factors, but it was the most difficult decision I ever made, much less, soon to be father. And, it was a little bit of an unknown, but I went ahead and did it. And 4 years later, we just actually celebrated our fourth year anniversary last week. And it's been a lot of fun growing a company, building a firm. We have great folks that work with us, and we're really fortunate to do what we do. I enjoy working with business owners. We do it every day. Property owners, and solving the problems of connecting the dots in commercial real estate.
Yeah, very good. And I'll say that John has been helping us probably for, I'd say 2 years, John, but probably it's 3, and helping us decide what we're going to do from an office space perspective. And one of the reasons John's speaking to us today is because my involvement with John and his thoroughness, his understanding of the market, his level of customer service, he's made it so much easier for us. And takes, it can be difficult locating property, and it can be difficult making decisions around what office space you need. And John is quite good at understanding what inventory is available out there, and getting to the bottom of what your current needs are, and as well as what your future needs are to help you make that decision. So, John, can you also talk a little bit about the business in general, just like geographically, where you guys typically work?
Sure. Yeah. So we're licensed in Maryland, DC, and Virginia. We serve, it's called the Mid Atlantic region. I would say, as a practical matter, say 60-75% of our work is Anne Arundel County focused. And as far as other areas, we do a lot of work in Howard County, Baltimore County and City, Prince George's County. So I would say Maryland focused for sure, specifically Anne Arundel County. If you looked at kind of a breakdown of transactions, I'd say 75% is Anne Arundel. As far as our company, there's 7 of us in the firm, 4 full-time agents. And, as far as the type of work that we do, our business, just as a matter of explaining, commercial real estate is bifurcated really into 2 sides. There's the side where we represent a business owner or a tenant, similar to you, Bill, or a landlord or property owner. Very similar. I like to use the corollary for selling a home. You're either the homeowner selling it, and you have an agent representing you, or the buyer, and you have an agent representing you as a buyer's agent. So we're usually on one side or the other of all real estate transactions in the commercial space. And the commercial product types would be retail, shopping centers, strip centers, restaurants, office professional space, medical space. There's warehouse and industrial, then commercial land for development, new projects, ground up, et cetera. And some other things that we do are we will actually act as a consultant or advisor on an hourly basis with clients from time to time to help solve their problems. And it's a little bit about our firm.
Okay, yeah, very good, thanks. And you didn't mention it, but I have seen some Rosso signs up on the Eastern Shore as well. So you're also representing some.
I would mention that, but yes, over the Eastern Shore, we're doing a fair amount of work over the bridge. If it gets too far, there's a real estate firm we tend to bring on as a team member. We kind of collaborate with them, but yes, we certainly on the Eastern Shore.
Okay, yeah, very good. And so maybe to start to get into a little bit of the detail, we'll start at a higher level. Just generally speaking, what you see in terms of current trends in the commercial market, what your take is on the impact of COVID-19, and then maybe even a little bit before that, what over the last maybe 4 or 5 years, what did the market look like coming into this? Before we've had this fairly drastic change over the last couple of months here.
Okay. Well, coming into this year, I think most business owners would say they were probably the most active they've been in probably their history. 2019 was a very active year for commercial real estate. We did the most production last year that we ever did, that I ever did. It's just as far as handling the amount of activity happening in the market, businesses expanding, opening up additional locations, huge sense of optimism, and things were going well. Beginning this year, same thing, January, February. In our specific area, we're fortunate to have, if you look at I guess just taking a step back, nationwide, certain areas get impacted more than others, but locally here, with the federal government in our backyard and a lot of the, the economic growth and activity that comes out of just the ancillary parts of the government contractors around Fort Meade, that's a huge driving force for employment, for growth. You look at what's happening around Fort Meade and West County, it's been a big area of growth. In Annapolis, it's always been a very attractive area for retailers, for businesses. We have high incomes all around this area, so much waterfront homes. You have a lot of executive level folks that either work in companies, own companies, that we've seen want to locate their companies into this area. So, that's what we saw coming in. Then, fast forward March, later in March, COVID starts happening. We had just a handful of, I guess I'd say in the March 20 some time frame, client called, John, I got to pull out of this deal. I'm just not comfortable with where things are going with coronavirus. And, I think at that point, everyone was trying to understand what's this really going to look like? What's this going to mean? And then another, and then another, and then another. And then, we talked to others in our industry. And then, obviously with the shutdown, I'd say March, April, and May, for most business owners, the overwhelming feelings were fear, uncertainty, and doubt. People have never experienced this before. They didn't know what to make of it. How is it going to impact their business, short term, long term? And a lot of people just have to hit the pause button. These are big decisions people are making that we're working with, and they just needed to slow down. I mean, I totally understand that. We had to do the same thing for various things we were considering. So, I would say retail, the retail and restaurants were the ones that I'd say got hit the worst. When you can't walk into a business and buy goods and obtain services, and you look at casual dining chains, they predicate their sales on how quickly they can turn tables, how many tables they can turn. So that shut down. I mean, it's substantial impacts, and we do a lot of retail, so we talk to a lot of restaurateurs and retail folks every day. I've heard from different landlords that rent payments in April and May were down to maybe 30% collected rents. So obviously the banks and business owners were focused on PPP and the government programs that were rolled out, some of the grant programs, but primarily PPP. And a lot of sale transactions were slowed down, even if people wanted to proceed forward. I mean, we ended up being able to sell a condo that was past the due diligence phase, where a deposit becomes hard and non-refundable. The buyers and sellers still wanted to complete the deal, but the banks were just backed up with PPP and that whole process. So it was just overwhelming for the banks to really do anything else for a period of time, and that slowed down velocity of deals, et cetera. So, fast forward again, you get into June, July. I would say the big word in my head is adaptation. People have adapted, and they say, all right, well, we can't sit on our hands anymore. We need to get back to business, but we need to adapt to, wearing face masks and taking new policies into effect in their companies. Obviously, there was a lot of, there was primarily, most folks did the work from home for all of their employees. We did that for a period of time, and that's a whole nother topic we can get into. I think we will be getting into as far as what work from home looks like and what the office sector looks like. I think will be kind of later in the discussion, but people had to change their business models. Restaurants that weren't really set up, their concept wasn't a delivery or pickup curbside based business. Well, guess what? Now it is. We saw some retailers, some larger restaurants such as Chipotle. They have a new concept they call Chipotle lanes. It'll be the drive-through Chipotle. I think so. This forced the hand for a lot of folks in that space to now move into new ways of doing their business in the 21st century. Now in the 2020s, and how people are visiting them and obtaining goods and services.
Yeah, and you mentioned the we sort of all almost overnight found ourselves working in our fourth bedroom, and then it seems now that is obviously a lot more accepted and maybe might become somewhat of the new normal to some extent. So what's your take on that relative to the impact to the market, and where do you see the market generally going from a rents perspective, a vacancy perspective, and also it seems to me that you know, I tend to be somewhat of a contrarian thinker, and so when these things happen, the flip side is normally there's opportunity. And so, do you see any specific areas where there has been more opportunity? And again, just what do you think the impact is to this? Everybody all of a sudden working from home.
Yeah. So I think you're going to see more seismic shifts with the work from home in the larger market areas. So for a second, if we're just going to talk about Anne Arundel County for the purposes of this discussion, and probably the attendees and where they're located, most of Anne Arundel County, I would say, in comparison to the city areas like the DCs, Baltimore's, then now global or nationalize a little bit. Look at California, look at Texas. You have more institutional owners that own these larger buildings, so the average space sizes are bigger. In, say, Annapolis or Anne Arundel County, average buildings are, say, 40 to 75,000 square feet for these large office buildings. Average tenant space size, 2 to 5,000 square feet. So these are smaller businesses. And, as I explained, earlier, you have a lot of, again, for Annapolis, CEOs that live in this area, their offices are in this area. There's going to be some that absolutely, if you're tech oriented, say you have a bunch of coders that just put on headphones all day and they're going to sit in a cube and they can do that work no matter if they're in that cube or if they're at home. Absolutely, it makes sense to maybe shift that all full-time work from home moving forward. When you have sales teams and environments where there's really, employers want to define what's their culture, what's their brand, what makes them different, how do you attract the best talent. And you lose a lot of those factors when you don't have a sense of place and a place for employees to come. So I'm candidly of the mindset here locally, we're not going to see that huge of an impact on the office side. You will see some, but again, people still want a sense of place. I think that we're cautiously optimistic that at least I'm cautiously optimistic that it's going to go that way in our market. During the pandemic, for instance, I'm represented a staffing firm, and they in May signed their lease for a new headquarters at Park Place, 40-some hundred square feet. I think it was 4,300 square feet, and they need a place to call their own so their team can come together. What that's going to look like, again, it's subject for interpretation, but there's going to be a contraction of certainly some demand in the office environment, and we'll just have to see how that rolls out.
Yeah. Well, as a business owner, and that you had mentioned the whole culture, planning. We're doing a lot of Zoom check-ins, which are very efficient, and we get to see each other. But I always make the comment that having that central place where we can go to and where we can see each other in the body language and running out for lunch or saying goodbye in the parking lot on the way home, those little interactions I miss a lot. And so it seems to me that's still such a critical part of us, just as human beings, to be close to one another. So I agree. And our intention is, we're still going to get office space. It hasn't caused us to say we're going completely to home, but we're certainly being more liberal now in terms of the expectations of where our employees work. And before we had some working from home, and now that we see it works pretty well, we're much more open to providing that opportunity.
Yeah, and I think it's going to look different for different companies and what their specific needs are, requirements. We're seeing some clients that make sense. Let's not rent 6,000 square feet and put everything under one roof at this Class A office building, but let's break that apart for the future, and let's have a place where we can have our team meetings and our executive office suite. But then if a sales force can rent $16 per foot flex space with St. John Properties at Melford Tech Center, which is 3 and 301, very commutable to DC and Baltimore, Crofton, Anne Arundel, Prince George's, etc. Let's spend half the rent and just kind of look at splitting apart and finding a kind of some savings with looking at how to work your office footprint moving forward. Now that said, putting office aside, there's other product types, right? So we've actually seen flex industrial warehouse space, specifically warehouse space in Baltimore, become even more, having more demand in warehouse space since the pandemic. This is a shift the other direction where you have a lot of the retail that has shifted from brick and mortar, big box retail going online. So, I think it was reported Amazon signed, I don't know how many, but a handful of leases, meaningful, substantial leases over the last few months to help with their what they call last mile delivery, what it takes to get the product to the customer the last mile. The I-95 corridor, there's the old Bethlehem steel plant, now it's called Trade Point Atlantic, on the I-95 corridor. That's a major hub for the Amazons and FedEx, Under Armour, et cetera, is in that area. So warehouses, the demand and the vacancy rates are just as strong, I think, as pre-pandemic, if not stronger, actually. In some areas, I think they've seen rents tick up in that space. So you got to kind of split up. There's not a one size fits all. This is what everything looks like in commercial real estate. There's kind of, in my mind, retail, office, and industrial warehouse. And all three are a little bit different. And then you have the other factor, which is multifamily, which we do some work in, and high-rise apartments, which have done relatively well. And just people need a place to live, spending more time at home, and our area's fared pretty well with that. And we can get into some new development stuff as well, I think, later in our chat.
Yeah. Actually, I was going to ask you that now, if you don't mind. What do you see in terms of what's on the horizon for new products or new projects in the area?
Well, I think what if we kept it again Anne Arundel County focused, and things that probably most interesting for the majority that are maybe listening, in retail, since that's what we all experience with our families when we're off work, is where are we going to go and what are we going to do. There's a couple. I would say Annapolis Mall is an obvious one, and I think there's going to be a major repositioning of the mall. Westfield, Unival, Radamco, Westfield, I think is what they call them, is in the process of a major repositioning of the mall. I think it's no secret that with Sears, Dark, now obviously Nordstrom is out of business. Those are two big box anchors that they need to figure out what to do with. Lord & Taylor obviously went out a while ago. The entertainment, or not, I'll get to that. The newer wing of the mall that's basically flanks Lord & Taylor, connects kind of Lord & Taylor and Nordstrom. You kind of had to walk through Lord & Taylor to access. It's always a little bit tricky. That never really did well. So last year, that was a major initiative for them. We actually worked with Westfield and we put a tenant into that wing of the mall that's building out today. So just as with that real quick, my understanding of their plan, Container Store is building out. They're going to go on the first floor of the Lord & Taylor box. They're going to split up, I think, 2 additional, say 20,000 square foot spaces and kind of multi-tenant the first floor of that. So Container Store, then 2 other junior anchors in that box on the first floor. Second level, my understanding is they're going to try to focus with medical office space, to bring medical office space to that box. We'll see how that goes. Some malls have tried that in the past. We'll see if they're successful. And then that wing that I talked about, the newer wing that they built, say 10, 15 years ago, their plan was, so they're moving all of the merchandising, hard goods, soft goods, clothing retailers out of that wing into the center part of the mall. That last year they tell you between Nordstrom and Macy's. Now, we'll see what happens at Macy's. So moving all of that out and turning that into more experiential entertainment businesses. The library expanded from, say, 3,500 square feet to 13,000 square feet. They're open now. They're on that corner as you're walking down from the Nordstrom area and California Pizza Kitchen. So they're on the left side. The tenant that we represented signed a lease for 17,000 square feet on the right side, right next to the library. It's called Kids Resort. It's like an indoor playground, play area, similar to DZ Discovery Zone back in the day. So two really synergistic kid, family-oriented businesses that are experiential. The fitness, I think Retro Fitness is the fitness group that opened up, where I can't remember what the retailer was, but right off of the parking field toward, I think, Maggiano's. And then they were talking to like an indoor bowling place, bar and bowling and that sort of thing. So again, making it experiential, something you can't buy on Amazon. You got to go to the mall to experience. COVID, what that's gonna look like, we'll see. But that's their plan there. Sears, they were working with, my understanding, they were trying really hard to get Wegmans there. Wegmans ended up selecting the site on Riva. That has since, fizzled out for various reasons that have been reported. I think they'd love to still put a grocery store into the Sears and Sears Auto Center area. Maybe do something grocery and some additional retail uses. Again, all this is just speculation. I can't warrant any of this. And then Nordstrom, I think they'd like to see something residential oriented there. So say multifamily apartments with some retail. So really bringing more of a mixed use development, something that you'd see at the town center to the mall, but just with a different look and feel. And Westfield just got approvals for Westfield, the Montgomery County Mall, to do pretty much the same thing. So the story's been written already. We can see how it ends. It's just a matter of getting there and what that ends up looking like.
Yeah, it's this repurposing of this space is some of it I'm amazed by. It tends to be pretty creative, and even the medical offices going into the second floor where the Lord and Taylor used to be it's just amazing to think of, but it makes sense. And I'm on the board of the Anne Arundel County Library Foundation, was involved with moving the Discoveries Library to that branch, or to that wing that you mentioned. And that branch has been one of our most successful branches. Easy parking, easy transportation, anyways, it's been quite beneficial to the library. And so it goes back to my contrarian point, when you think certain portions of real estate might be dead, like a mall or a shopping center, there are so many other purposes you can use it for that make a lot of sense. So,
and Westfield, or URW, I think is what they're called. They're a publicly traded REIT that's multinational, so they've done this other places. It's not like this is going to be a big experiment. It's just a matter of implementing, bringing in the different components other than retail into the mall. So that's that. Another one would be the town center. You look at the town center, there's been a lot of disruption on the food space there with Bonefish Grill obviously closed, Chop House closed. This was historical now, but they're still closed, along with Brio shut down. I'm not sure P.F. Chang's is doing well or not, but that's speculation in the market. What else? Brooks Brothers, they shut down, but that's actually the one that is a new restaurant coming. That's True Food Kitchen, which is a fantastic concept. And I'm personally really happy to see that go there. So True Food Kitchen is building out now. It's behind all the construction stuff. They lost the 24-hour fitness tenant during the pandemic. So that'll be a big space to backfill. And there's speculation about Bed Bath Beyond. So, a lot of those retailers, and then you go to Pier 1 Imports is closing. That's 10,000 square feet. So there's going to be a very similar discussion there about what does that look like long-term. There's also kind of two groups that are affiliated now with the town center. It's a group, Trademark, I think is their name, out of Texas, that's handling a lot of the more interior part of the town center. I'm sorry, we have an ambulance behind us if it's loud, but they're handling basically between Gordon Biersch and then up to the Brio area, from circle to circle, and then in the Whole Foods. And then Greenberg Gibbons, I believe, is still handling, they're still handling the out parcel where Mission Barbecue and the office building and Einstein is located, along with on the other side where Zoe's Kitchen is located. So, I think there's a lot of opportunity there. The good news there is that those out parcels have free surface parking. I think the structured parking has always been something that the Annapolis consumer has not been able to really get their head wrapped around, the structured parking component. Normally, again, like you'll see that in the other markets, the DC metro markets. That was something new here. You could pick a number of reasons why certain things didn't work there, but I think they're finding their place. They're trying to activate common areas, redesign the flow of traffic flow, incorporate larger green space areas for concerts and stuff that you can experience at the town center as well. Family-oriented stuff, and we'll see where that goes. Another couple to note: we were talking about apartments and multifamily on Riva Road. There's a project that has, I'm not sure exactly how far through approvals, but it's pretty well through approvals. The corner of Admiral Cochrane and Riva Road, formerly Airink, now it's Rockwell Collins. But on the right side, that's going to be a new project. Planned 250 apartments with some office and retail. That's going through the development process again right now. There's also the old tall tower Verizon building that was going to be new Class A office a number of years ago, and then that traded hands. The new owner is actually planning to do 2 large new retail multi-tenant buildings on Riva Road. That would be directly across from Zoe's Kitchen in the town center. And then behind that, maybe some more additional multifamily or age-restricted homes. For those on the Eastern Shore, there's another project our firm's actually involved with on the marketing side, but it's called Bay Manor. It sits right adjacent to the Chesapeake Bay Beach Club. It's a parcel that sits really between the marina and the beach club, Noxie's Table, and the new inn. That'll be 60, 70 new apartments with ground floor retail, and that the demolition started. That's been completed. I think they're just finalizing financing and then going to be moving that forward. And that's something, again, we're helping that landlord who owns that with the lease up of the retail component to bring retail there that will help service the apartments above, the overall community area down Route 8, and specifically, obviously around the beach club.
Yeah, it seems, even given the current economic conditions and some of the uncertainty, it's still a pretty vibrant market, and still a lot of opportunities and still a lot of things going on. So I think to some extent there's the impression that things have slowed down materially, and to some extent they have slowed down, but to some extent they have just simply changed. Maybe the intent, as you mentioned, the Riva building changed a little bit from what the original concept was, but there's definitely opportunity out there. And so, all right, very good. So I was thinking, from here we'll go into a little more detail, just specific considerations. If a business owner is looking to purchase or lease a property, just what the considerations are, what your role or a typical broker's role is in helping with the transaction, and again, both from either a sale perspective and a lease perspective. Maybe we can start with what a lease transaction typically looks like, and then we can look at maybe the sales side.
Sure. Yeah. So, on a lease transaction, when someone's leasing the space versus buying it, which I'd say 60% of what we do is leasing, 40% say in the sale. We're either on one side or the other. We're representing the landlords or the tenant, and the main terms so I'll take it from the tenant side. If we're helping a business, the first thing we're going to do with that tenant is help define what's their requirement. If they're in a space, what works well, what do they like, what don't they like, and then how do you look at a new space? What does that look like for the next 5 to 10 years? So let's figure out what the ideal outcome is and then how to get there. And similar, looking for a home, we'll do comprehensive searches of everything that's on the market, send out, we have 1,500 contacts locally that we can send a specific email blast out to procure sites that might not be on the market or be off market. So once we get a good list of options, we'll work with the client to find a short list, top 3 or 4 that look most interesting, and then tour the properties. Usually there's kind of 2 or 3 standouts. We'll either submit a request for proposal from the landlord, or submit a letter of intent, which is kind of submitting the offer. So it's either asking for an offer or submitting an offer. And then in that letter of intent document, the terms, for a lease that you want to look at are, first of all, what's the type of lease? If it's retail, it's probably a triple net lease, which means the tenant pays all expenses, CAM, common area maintenance, real estate taxes, et cetera, in addition to the base rent. So things are broken apart. If it's office, it's probably full service. It's like all included. Sometimes you'll pay for electric. So defining what is the rent. Not all rents are created equal. There's lots. You got to compare apples to apples first. Business owners, when I was looking for office space, what's your monthly nut? I just want to know what am I paying per month? That's what we help simplify. Terms you want to negotiate would be, if you're renting a space, and let's just use a retail example, what's the current condition of the space? Is there anything we want the landlord to do work-wise, delivering the space to us with certain things complete? That can be negotiated in tow with a tenant improvement allowance. How much money is the landlord willing to provide the tenant to offset their improvements? And that's something we can talk through. How does that work? Usually it's a check, and that's can be $10 or $20 or I did a restaurant in Baltimore City for a client, and we got it was $1 million in TI. It was 10,000 square foot space, $100 a foot, so these can be really material things to negotiate. In addition to when does the rent commence, specific to when is the lease signed. So if the lease is signed, you have 30 days and the rent starts, or do you need to go through a process of space planning, getting architects and getting construction drawings, MEPs, mechanical, electrical, plumbing drawings. These things take time. You want to build in enough time for all of these things, get a permit, build out, get complete with build out, go through the county for your use and occupancy permit, be able to open for business. So we want to understand that and set us up for success from a timeline. There's other things in there. If it's a retail lease, having exclusivity rights to be the only nail salon or hair salon or dry cleaner or whatever the business is, educational service in a shopping center. So you're kind of you're controlling the competition for your own business in the property that your landlord owns that you're paying rent. There's other stuff we can talk through, but and a really important one is a guarantee. The landlord wants to know who's on the hook for paying rent. If it's a newer business and you can't produce several years of historical financials showing profit and loss, your balance sheet, assets, if stuff hits the fan, your landlord and the tenant says, I can't pay, what do you have as collateral? There might be a personal guarantee if there's not enough on the business side. So, I had to do a personal guarantee for my first lease. I was a new business. Those are things you want to negotiate. How much is the guarantee amount? Can you get a monetary cap? Can that burn off over a certain number of years or a period of time? Or roll off to a 1 year rolling guarantee. You're only responsible for 1 year's worth of rent after you've proven that you're a good tenant for a period of time. So these are all things we help negotiate with our clients. You want to switch to sale?
Yeah, well, actually, before the sale, can you you touched on it briefly, but there always seems to be a little bit of uncertainty about what tenant improvements and allowances are and how that impacts the deal. Can you just expand upon that just a little bit?
Yeah, so let's use that example. It was a big tenant improvement check for a client of mine. It was $1 million of tenant improvements. It was a $4 million for $5 million restaurant build out. So, it paid a good chunk, but usually how that works, like in that case, we were actually able to negotiate a schedule. So like a third. When a third of the work's complete and you can get a lien waiver for a certain amount of stuff from contractors that they've been paid, you get a reimbursement. Another third, and then at completion. So it can be broken up when the tenant gets that amount of money. The majority of the time, the tenant pays for all the costs, and it's only until their contractors have been paid in full, the work's done, they're open for business, and all of the contractors that completed work on that landlord's property has provided the landlord with a waiver of lien. They won't file a lien on the property because they haven't been paid. At that point, the landlord's willing to provide the check to offset those improvements. They just don't want to pay a tenant who said, hey, I paid the contractor, we're all good. Where's my $50,000 of tenant improvements? They get the money, they never pay the contractor files a lien on the property, and now it's an ordeal. So that's something that can be negotiated, but that's just what I've seen in the past.
Yep. Okay. Yep. Thank you. Very good. Yes. And yes. So from a sale perspective, maybe first, how do you determine if you're looking at purchasing a property, how much you want to pay for that property?
Great question. Well, I would say, it's tough to just define that carte blanche, but most of the time there's really two factors. There's sales comps. It's what a very similar like-kind properties sell for on a per foot basis or a per acre or whatever you're buying. What it really comes down to, and if we focus on the owner user, someone that's buying the property for the purposes of their business, similar to leasing, what is your monthly cost to occupy the space? What are your occupancy costs? And does it make sense for you to own something or lease it? Which one? And we've had that question, countless times. We developed a spreadsheet kind of analysis form that we help people actually compare side by side a sale versus a lease. And on a sale, what does that look like? A lot of it's financing driven as well. It'll be a lot easier to make sense of owning if interest rate environment is very low and competitive, which it is today. The question is, if your total debt service, your interest principal payments, real estate taxes are a certain amount effectively on a per foot basis comparable to what you rent that property for in just a normal market rent scenario, they're pretty close. You're going to be better off with building equity and buying the property. Additionally, as you know, Bill, there's so many tax advantages to just owning property with depreciation and other kind of intangible when you're doing the sale factors, but become very tangible factors once you own the property that long-term are things to consider. And I probably skated around that a little bit, but that's, hopefully a little helpful.
Yeah, no, that was good. Yeah. And you mentioned financing, and a lot of people are familiar with, purchasing a property and putting 20% down and getting a 30-year fixed rate mortgage. What does it look like if you're doing it on the commercial side? If you're looking to acquire office space or any kind of commercial space, understanding there's probably a range of possible terms. What do you typically see?
So buying a commercial property is not buying a home. Most people, are first time commercial buyers versus first time home buyers, I guess. Just kind of assume that, and that's rightfully so. That's the only thing you have experience doing or corollary. It's not 30-year fixed financing. You don't get a 30-year mortgage. If you do, that's incredible, and you should take it immediately. But most of the time in commercial, there's, instead of a 30-year fixed rate, the term of the loan matches the amortization of the loan, what you're paying it back under what term. In commercial, there's two different time frames. Usually there's the amortization of, if you got a 30-year amortization, your payment would conceivably be what a 30-year mortgage would be. But the difference is there's the term of the loan. Most commercial financing instruments, the term, I've seen 5, 7, 10, 15, I've seen 20. I've heard of 25-year. I think I'm doing a 20 right now with a client, but essentially at the end of that, you can get better interest rates usually if you're not locking that rate in for a longer period of time. So the shorter the term, usually the lower the interest rate. But I would say that the majority of the time we see for buying a property of 20% down, 25% down, traditional financing with, I'd say a 10-year term and a 20-year amortization or something like that. And, it takes someone a little bit to just get their head wrapped around that, what that is, what it looks like from a payment standpoint. And after 9 years on a 10-year, you need to start thinking about refinancing or rolling into a different loan or a bank, and the rate can be different. But you've usually paid down enough of the principal by that time. When you refinance, you're in a better situation anyway. There's SBA products. You want to talk about SBA a little bit, or?
Yeah, yeah, yeah. The SBA, one of the advantages, one of the hurdles oftentimes is getting the capital for the down payment. And I think the SBA provides the opportunity to put less down up front so you can acquire the building with putting less cash in.
Yes.
That was sort of a question, even though I was stating it like I knew what I was talking about there.
That's good. Absolutely. And yes, I mean, SBA offers great products. Usually when you do an SBA loan, it's split into, instead of you put 20% down, the bank has 80% loan to value. The buyer can just put usually 10% down, and then the bank will, I believe, take 50% of the loan, and then the SBA will take 40%. So the SBA guarantees 40% of the loan. The bank's at 50, the borrower puts in 10%. So less liquidity, less equity for the borrower. The terms of the SBA financing, I had one client recently get terms sent over from a local bank, I believe it was a Rosso Federal, and what they were willing to do was 50% of the loan would be with a Rosso Federal savings bank, and I believe it was 20-year amortization, 3.75%. Fixed for 10 years. So after 10 years, that portion of the loan you need to look at. There's a fee involved, usually on the SBA loans as well. The SBA portion, so that was 50%. The other 40% of that, so let's just say it was $1 million purchase. Borrower puts in 100,000. Bank is financing 50. 500,000. The SBA will then have the other portion, the 400, and usually that rate is lower. We saw 2.41% fixed for 25 years. So great terms, great rates. Right now is I'd say out of the activity we're seeing coming back and getting going since COVID, there's been a big push for people to actually go out and buy property. We have probably more transactions that are sales where people are buying property than leasing. Usually it's a little bit flip-flopped, but people want to control their destiny. I think if something else happens, it's nicer, if you're your own landlord, instead of calling the landlord, can we do a workout? And by the way, we saw a lot of landlords and tenants during the peak of COVID work out some creative strategies and ways so everyone feels a little bit of pain, but no one's going to go under because of this. I mean, talking about financing, landlords still have, you own a building, you're still going to have your mortgage. A lot of banks are able to work out, say, 90-day deferments of loans. Landlords were able to pass some of that on to the tenant. Tenants were able to either get deferments on rent for a period of time, or maybe split it up where the tenant pays only a portion of what they otherwise would. Another part gets paid back, next year over some period of time. Maybe a certain part gets forgiven. So we saw a lot of different strategies with landlords and tenants. And a lot of our time during the first couple months was actually getting calls from clients that were tenants that we helped or landlords that we helped, as far as, hey, what is your take on this, John? What are you seeing other people doing? What do you think is reasonable? And kind of playing, trying to play middle ground there. So with all that said, you can own the property and only have, one person to talk to being your bank for your business. A lot of people are moving in that direction.
Yeah. I was going to ask you about interest rates, but I think you mentioned, interest rates generally have plummeted, around the world, but it's impacted all products. And so some of those rates you just quoted on commercial properties, even the SBA at below 2.5 on a 30-year, or was it 25-year amortization. It would seem to me that the equation, if you're comparing a lease to a purchase, the purchase is starting to look, all of the things being equal, to be much, much more attractive.
Yep, we actually did a side-by-side with a client looking at a 20,000 square foot flex building, and the financing they were able to get, their effective rent that they would be paying for the building was $9 a foot. If you added in their principal interest on owning the property, the real estate taxes, estimated insurance, estimated grounds maintenance, all the things. And then as a tenant, if they were to lease the property, they'd be paying base rent instead of principal and interest. And they'd be paying the triple nets, which include the common area maintenance, real estate taxes, insurance. If they were to rent the building, the face rent on the building is $12.50 a foot. So they're literally they would be able to buy the building for several dollars per foot less than otherwise they'd be paying in rent. So it's definitely getting more interesting to buy if you can.
Yeah,
The trouble is the lack of supply. That's a real issue.
Got it.
Not a lot of stuff out there.
Yeah, just being able to find the property you need. Yeah, and if you're purchasing, obviously you get. If we have time, we're going to push up against the hour here, but I've got a few tax benefits I was going to mention. But the ability to derive you're paying down equity or paying down your loan and building equity, and then also assuming you're getting appreciation on the building, that the comparison of the square foot is the first part of it, but the second part of it is, at the end of 10 years, you've got a significant amount of equity built into an asset that, that can provide for your retirement or it's just not cash out the door for paying rent. So, right. So, let me see. So that the purchase versus rent is that an analysis that you could help somebody with? Is that something you would typically do if somebody had a property where they could? You mentioned you did an analysis for a client. Is that something if a prospective business owner that was looking to either buy or rent, that you could help them with?
Yeah, I mean, yes, we do it all the time. It's just part of what we do to help our client look at the transaction. Does it make sense? Does it pencil? If we can get it for this price versus that price, what's the difference effectively on their returns? And that's in the owner occupied space. If someone's buying a property, that's exactly what we did with that client. If someone's buying a property that's an investment property, we have a whole different pro forma and model that we've created to help look at what does that look like as far as your returns and your going in cap rate. And then if you stabilize it, what's the cost to stabilize a building as far as if there's vacancy, to rent the space, leasing commissions, tenant improvements, X, Y, and Z. And then once you spent that amount, that's your total basis in the property, what's your stabilized rent that you're getting from the tenants, net rent, and then what's your stabilized cap rate. So yes, that's what we do all the time. And that's really what we hope our clients look to us to do to help them through that process.
Gotcha. Okay. Very, very good. Very good. I'll just look at my list of questions here, John. And actually, the next thing I had, so from an overview of the market, that was essentially everything that we intended on covering. I have a few things from a tax perspective. Let me just see. It's 11:55. I think we can still do it and wrap by 12. For those, so we fundamentally believe that investing in commercial real estate from a long-term perspective makes sense as a part of a diversified portfolio, and there's various options of doing that. One of which is to participate in a limited role, typically like a limited partner in a bigger deal. And so we've been talking today primarily about if you want to acquire space for your business, but for those that have an interest outside of that, there are several opportunities that are quite attractive, where you can participate anywhere from a publicly traded REIT or a fund that owns a real estate investment trust, to participating in with local developers and local builders that typically are raising capital for projects they're doing. And I think John alluded to it a little bit earlier, but we think it makes sense. And so outside of the realm of, what you need for your business, considering commercial real estate for an investment, from an investment perspective, we think also makes a lot of sense. So we're tax guys, and a lot of the decisions we make in all of the areas of planning for our clients is, what are the tax impact? Not that the taxes drive it, but the taxes are an important, component of it. And commercial real estate is from the Internal Revenue perspective, the Internal Revenue Code has a lot of favorable stuff built into it to promote the ownership of commercial real estate in general, but commercial real estate in general. And, most of the expenses you incur, you can deduct, including, the interest on your mortgage. John had mentioned earlier, you get to depreciate the building. So once you purchase it, you determine an amount that can be depreciated. So you get to actually expense a portion each year of your purchase price. That doesn't cost you anything from a cash perspective. That just simply goes on your tax return. And from a cash flow perspective, creates a better return from an after-tax perspective. If you sell a property, in most cases, you get long-term capital gains. And so, these capital gains are significantly lower than ordinary income taxes. And if you're creative enough, you can actually exchange the property, or if you hold it till death, you get a step up in basis. There's ways that you never pay tax on it. So you could acquire a property for business purposes, own it for 20 years, depreciate it, get all the benefits from it. And then if you decide to sell it, you're going to have very, very favorable tax treatment. If you decide to keep it and it passes to the next generation, they would actually get a step up in basis, meaning that their basis for tax purposes, the number that they use to determine their gain would be the same as the value when they inherit it. And so commercial real estate in general is very, very attractive. Also, although there's talk now potentially if there's a change in administration, this will disappear, but there's a section 199A of the Internal Revenue Code it provides for a 20% reduction in your income for certain types of income, and included in that is the income from rental income from commercial properties. And so if you have $100,000 in net income from your property, I'm simplifying it a little bit, but this is pretty close. You essentially get to reduce that by 20%. So even though you recognize the $100,000 in income, your taxes are based on $80,000. You actually get $20,000 that you don't have to report. And then the last thing I was going to mention, and this is somewhat unique and it doesn't really cover everybody, but leasehold improvements, if you do a build out, and then also certain other properties, restaurant property and retail improvement property. What you had to do is if you did a build out, you would capitalize it. So you would not take the entire expense the first year. You would amortize it usually over a 15-year period. So you got to take 1/15 every year. In 2017, a tax law was passed that for most capital expenditures up to certain limits, you could take the expense immediately, just straight to the bottom line and eliminate your income. They missed these items. They missed the leasehold improvements. They missed restaurant property. And so if you're in those industries or if you incurred those expenditures in previous years, the law that just passed in March, the CARES Act, provides that you can now change the election to immediately expense those. And not just for going forward prospectively, but you can go back to your 2018 tax return and amend that return. And so if in 2018 you acquired property through a lease or through a purchase and you had incurred these improvements and you capitalized them, you can go back, contact your CPA and it could be a significant tax benefit for you, because if you had a lot of income that year, you're immediately going to be able to offset that income and get a refund check. So that's a little bit in the weeds, but I wanted to mention it just because it's an important change to the law that really could be quite beneficial.
Bill, does that work for both? I mean, obviously the business owner in your example, but for that's a professional landlord, all they do is work like for their tenant improvements, for tenant spaces.
Both sides. Yep.
Yeah. Okay.
Either side gets to do it. Yep. Good question. Yeah. So, and again, it is quite beneficial. So, all right, I think that's it. So, John, I didn't know if there was anything else that I missed there. I didn't check Q&A, so we don't have any Q&A. Well, again, personally and professionally working with John, I can't say enough about him. John, I thank you so much for joining us today. I really think it was, very informative. I hope everybody found it to be, quite beneficial. And thanks to everybody joining us today. I hope you found it helpful. We are going to, as I mentioned, we'll send out a follow-up email with some additional information, including a recording of today's session. I'll put John's contact information in there in case you want to contact John. John, I didn't know before I sign off, did you have anything else that you would like to add?
No, I think that's it. I'm
okay.
Getting to the point where I've heard my voice for so long. I'm done talking. But no, I'm good. No, I appreciate it. And thank you for thinking of me to do this. It's fun, and it's always great working with you and the BayPoint team. And yeah, maybe we'll do another. So
okay, that sounds great. Yes, excellent job. Yes, thank you. And again, thanks everybody so much for joining us. Everybody, I hope you have a good day. Stay well, stay safe, and take care.